So here for warranty. So Soundgarden sold 200 laser copiers on July 10th, 2020 for $4,000 apiece, together with a 1-year warranty. Maintenance on each copier, the warranty period is estimated to be $330. Prepare the entries to record the sale of the copiers, the related warranty costs, and any accrual on December 31st. Actual warranty costs incurred in 2020 were $17,000. Okay. So here we're getting into like a little bit of a revenue recognition issue. And if you kind of go through and say that, okay, let's see how they're doing it here. Okay. So what they're doing is they're taking cash. So basically this is going to be 200 times 4,000 right over here. So you've got the cash and then the sales revenue. You would also be debiting cost of goods sold, crediting inventory for the copiers. Okay, so the warranty cost though, and this is going to be on 7/10/20. So my warranty expense and my warranty liability, which I'll be recording on the same day as the sale, is going to be 330 times 200 or 66,000. Okay. So then what you would do over here is, because we would want to be going through and recognizing it that, and now the actual warranty costs were 17,000. So at 12/31/20, I'm going to debit the warranty liability for 17. I'm going to be crediting cash to basically to record this over here. So the sale of the copiers is here. If I knew what they cost me, I would also show a cost of goods sold. The warranty expense, I would recognize the full amount when you make the sale. And that's, to me, that's when you recognize it, because you're recognizing it. You recognize that expense. If you know what it's going to be during the warranty period, that's when I would go through and recognizing it. And what your book does, which is a little bit different, is that they basically show, they go warranty expense, 17,000, cash, 17,000. And then they're going through here and they're doing warranty expense for 49,000. And then they're crediting the warranty liability for 49,000. Now, if you look at this here, we're essentially getting to the same number. The only difference that what I'm doing is I'm recognizing that cost up front, but there's two different ways of going through and doing it. Let's take a look at exercise 1311. Early in 2020, Crow Equipment sold 500 Roll-O-Matics at $6,000 each. They spent $20,000 servicing the 2-year assurance warranties that accompany the Roll-O-Matic. All applicable transactions are on a cash basis. Okay. Okay, prepare the 2020 journal entries for Crow. Assume that the Crow estimates the total cost of servicing the warranties in the second year will be $35,000. Okay. So on 1/1/20, we're going to have cash, and then you're going to have sales revenue at 500 times 6,000, or for $3 million. Okay, so that's recording the sale. And then they tell us here that they spent $20,000 servicing the 2-year. Okay, so they spent $20,000 servicing the 2-year assurance warranties that will accompany during 2020. So 12/31/20, cash warranty expense. and this would be 20,000, and then this would also be 20,000. Now, assume that Crow estimates the total cost of servicing the warranties in the second year will be 35,000. So what I would want to do here also in 2020 is I'm also going to record the liability. And this would be here for 35,000. So this is because I want to recognize that warranty expense in the period incurred. That's what I'm trying to go through and do. Okay, so this is how I would go through and record the warranty for 2020. The next one here is prepare 2020 entries for Crow, assuming that warranties are not an integral part of the sale, a service type warranty. Assume that of the sales total, 56,000 relates to the sale of warranty contracts. Warranty costs incurred in 2020 were 20,000. Estimate revenues to be recognized on a straight line basis. Okay. So here you're getting cash of 3 million. And then in terms of the sales revenue, Rollomatic, this is going to be 3.6 million minus 56,000. Excuse me, 3 million minus 56,000. My warranty okay. And what we're going to call this is actually, this is not warranty revenue. This is unearned warranty revenue. Okay, so if I'm selling this as a separate component away from this. So this is if I'm going through and giving the warranty. But here, if I'm selling the warranty as a separate part and I'm getting the money for it up front on 1/1/20, I'm going to recognize unearned warranty revenue. So then over here, like in terms of so my warranty expense during the year is going to be 20,000. And then at the same time, I'm also going to be taking this 56,000 and after year one, I'm going to have over here, this is going to be half of the amount because if I sold it in early 20, it's a 2-year warranty. So this is going to be 56,000 divided by 2. Or over here as for warranty revenue. Okay. Okay. So because it is a sales type warranty, I do have to show this over here, and then I'm going to recognize the revenue from that warranty because it's a separate component of what I'm going through and doing here. So I want to thank you for watching this here with me today, and I look forward to seeing you on the next video. Have a great one.